time when you open your charts on bigger time frame, you realize that a big move happened and you have missed it. In this video, I'm going to show you how to catch these moves, and I'm going to show you how to do this in a very safe way. You can make notes with this video, and guys, please subscribe on my channel so that I can have more energy to create videos for you with useful content. So let me explain to you how I'm going to deal with this kind of situation, so that we can all learn how to catch these big moves from the beginning. As you can see, I'm on a weekly time frame. This happened around May this year. So from there the market went up. As I've told you, I will focus only on Euro USD. So I'm going to a daily time frame so that I can explain this thing very simple, in a very simple way. So here's a thing. As you can see, I'm going to the beginning of the trend. So all along, what you must focus on, I'm sure you all know what is a retracement. The retracement is when the market changes direction, like this. If the market was selling and then the market go up a little, then go down, we call this a retracement. This process is called a retracement. This video will deal with this issue so that we can use the retracement into our advantage to take long safe trades. So here's a first rule here. The first rule is that we need to see the retracement. This is a sell retracement, and then this is a buy retracement. I can show you on the chart. This video may be a little longer. It's for your benefit. This is a buy retracement. Okay, so this, we call this a retracement after the market broke this line. As the market is going up, when the market tried to go down, and then we see the market comes up and pass this line, our previous high, we call this a retracement. But if the market came here and failed, we were gonna call this our support. So in this way, to catch long trades, long trends, you need to focus on retracement. You need to identify what is a retracement and what is not a retracement, and what is a failed retracement. So we're going to start the beginning. The market came selling for weeks and days. Then what began happening? The market began buying here. As the market began going up, it began a small process of retracement. But the process, as you can see here, it tried to go up again. So this didn't pass. This was supposed to be a retracement for us to make a note, but this didn't happen. Instead, the market came down to break this line. So this was no longer a retracement that we want to see. So in this case, we avoid here. We don't do nothing. We just observe. Then as the market came down, it went up again. As it went up, you realize that it went down, and this time it never came to our previous low. So this was our first retracement. As you can see, this is our high. As you can see here, the market began going down, and then here, as the market began buying, it went down a little, something like 50% from our previous low. So from there, the market played around, of course, but then as soon as the market broke this, our previous high, before breaking our previous low, then this is our retracement. It's the same thing. It's the same thing as this. Okay, the whole structure, as you can see, okay, is our uptrend retracement. So this was our first retracement. It was not the easy one, but it was our first retracement. So when this happens, you just make a note first. As you can see, all we wanted was the market to break this first, okay, so that we can call this our first retracement. And the market was supposed not to break this. Once, if the market had broken this was gonna be a failed retracement. But because now the market didn't even reach here, the market instead went up, then this became our retracement structure. Unlike this one, as you can see, this one went up, came down to break our previous low. So this is a failed one. We don't count this one. We began counting our first retracement here. This is our first retracement. So now we want the second retracement. This is very important here. The second retracement is the confirmation of a bigger trend. The second retracement is the confirmation of a bigger trend. Whether you're using H1 or H4, the second retracement. This is our first retracement. So we want the second one. And remember, this is our first retracement because when the market went down, it failed to come here. And as the market went up, it broke this line. Okay. So our first retracement was this. It's big one and it was not easy. It took many days, but this was our first retracement. And we were not gonna call this a retracement because it didn't break this line yet. So we only call a retracement after this line is broken. Okay. So here you avoid, here you avoid, here you avoid, because this didn't break this line. Okay. So now we have our first retracement. So we are going to the second one. This is the most important retracement because once the second retracement happens, is the confirmation that here we really now have a trend. Once the second retracement happens, it proves to us that now we have a trend. As you can see, the market went down and then we're still waiting. We're still waiting for this to be a retracement. Okay. As the market began going up, as soon as it begins going up, then this is our retracement. This is our second retracement. Okay. This is our second retracement. Now we have a big move. From there, this is where the trend begins. As you can see, after this first retracement, market was not sure what to do because this does not confirm a big move. But once this happens the second time, now we have a big move. Once the retracement happened the second time, now we have a big trend. This is a confirmation of a trend. You must pay attention always when you see this. The first thing, the market will retrace a little first time. That does not confirm a trend. Okay. Then we are waiting for the second retracement, which is this one. Now you can see a market was very, very sure about what is happening. And from our second retracement, which is this one, just look what happened. The market went up so big. Okay. The market went up so big. Unlike this one. If you can check this move from here, you'll realize that it's very small. But from our second retracement, we have a very, very big, nice trend. Okay. So, but this still doesn't mean that you are going to enter a trade. What happens is that if you see this second retracement, now you are sure that the market will go in that direction. You are sure now that this is a buy retracement, then this is a buy trend. You don't place your hopes on the first retracement to say, no, now I know the market will buy. No, wait for a second retracement, which means what you must wait for, you must wait the market to go up, go down. You make a note, then market goes up. Then once it goes down, now you have a retracement. Now you have a bigger trend. So if you can catch these moves are always the biggest. If you can manage to catch these moves safely, then you are going to make it no matter what. Okay, but then you are not going to take your trading decision on day one. This will hurt you a lot. We are doing, as I've said in previous videos, if you didn't watch them, go and watch them. They are there: market structure 1, market structure 2. We are going to H4. Okay, and then my charts are not loading now because I've switched off data to avoid notifications. But here's the thing: you will also see this in H4 time frame. This will also happen. And then now I'm going to make a video about this on H4 time frame so that you can understand. So guys, please subscribe so that I can keep on bringing more videos like this on how to take these safe trades and how to recognize these biggest trends. Okay, those ones who have my PDF, you know that I've wrote about the first leg, okay, the second leg and the third leg, where you must take your trades. As you can see here, this was gonna be our first leg, and then as the market goes up, we can call this the second one, and this was gonna be our third leg. Okay, this was where we take our signal. Even if the trend line does not agree with us in this one, you can place a trend line here. It will agree with you. Let me place a trend line for you just to show example on how this thing works. Okay, so here you have a third leg. As you can see, you have 1, 2. As you can see, you have 1, market bounced here, 1, then you see the market bounced here, 2, and then now you see the market bounced here for the third time, and then from there it was a very nice big move. Okay, so if you don't have my PDF, please go to my website. I'll try to post the link below so that you can access it and read it about the first and the second leg and the third. And that rule alone is what moves the bigger trend. That move alone. You wait for a second retracement, then once the third come, you know that you have a big move. Now the market is sure that we are in a buy trade. Okay, those people with enough money to move the market, now they are getting in here to say, okay, now we're in a buy trade. I will explain a logic and a reason why this is happening so that you can understand in the next videos. Stay alert. Good luck, guys. Please don't forget to subscribe. Trade safe, guys.